Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin rarely does what most investors expect it to do. And right now, everybody is talking about the 2021 cycle top pattern repeating. And now it is hard to ignore the similarities between current price action and the 2021 peak. We had a capitulation, sideways chop, rally, pullback, and then rally into the top. Same thing this time around. We have a capitulation, sideways chop, rally, pullback, and then rally into what a lot of people are thinking is going to be a top. And now this isn't that surprising because it is human nature to have some recency bias and PTSD from the most recent cycle. But when I joined in 2017, believe it or not, a lot of people were expecting a double bubble like 2013. And then in 2021, everybody was expecting a parabola straight to 100K because that's what we saw in 2017. Once we had that huge sell-off, everybody was looking for a double bubble to 100K, just like we saw in 2013. And now that we're seeing what looks like the beginnings of a double top, a lot of people are looking back one cycle and expecting it to play out the same way. But we know markets rarely do what the majority of participants expect. So I expect this top to look different than the three tops that preceded it. And I expect it to have its own unique characteristics that catch the majority of investors off guard. I'd also be a lot more concerned about a cycle top if we saw the market enter the extreme greed region, like what we saw in November of 2024 before that major local top and March of 2024 before that major local top. But if anything, sentiment is still quite calm in this neutral region, and we've been seeing lower highs and higher lows in market sentiment, preparing for what looks like a bigger move to the upside. And I think the main driver of this recent price action is leverage traders getting wrecked over and over again, like we've seen this entire cycle. The market makers have a pattern they love repeating, and that's Bitcoin puts in a high, pulls back, puts in a higher high, everybody FOMOs into the market and tries to long the breakout, and then all of those long positions get wrecked. And then once everybody flips bearish and starts shorting the market, then the market actually puts in the rally and breaks out. We saw that same exact pattern over and over and over again. Even as recent as the January top of this year, we had that higher high, everybody piled in, huge sell-off wrecking every long position. Many people start selling and shorting at the bottom, and then that's what ended up marking the bottom and creating the rally to new highs. And what did we just see recently? We had a high, we pulled back, we took out the high, everybody probably started FOMOing into the market and trying to leverage along the breakout. And now we're selling off and wrecking those long positions before perhaps our next move higher. So for me, I still believe things are still on schedule as I wrote in the free weekly report on Monday, and it makes sense for Bitcoin to maintain its momentum and head higher over the next few weeks, even though we're seeing a bit of a shakeout right now. And you can tell this shop is beginning to drive a lot of investors crazy because one day everybody is expecting August to be green like 2021, 2017, and 2013 like we have. But then once we see a sell-off, everybody starts saying, look, August is usually red. It's usually a summer month. And I expect the same thing to happen in September. Whenever we're rallying in September, people are going to be excited and euphoric saying this time is different. But as soon as we see a pullback in September, everybody's going to be looking back at the seasonality and saying, couldn't you have seen that this was obviously going to be a red month, and flipping back and forth between bullish and bearish during the volatility and chop. I still expect Bitcoin to rally to the very expensive region before the top ends up being in, because by that point we'll be very far from the 200-week moving average, and I believe the profit taking and gravity that's going to start pulling price down once that happens would increase the risk of a major top and correction. But what we've seen so far this cycle is a pullback to the 50-week, big rally, pullback to the 50-week, big rally, pullback to the 50-week, big rally. Could we pull back to the 50-week first? Of course, but I'm not going to be very concerned the top is in before we fall back below the 50-week and break market structure. Now, there will be warning signs like losing 110,000 that could give us an early indicator that something isn't right. But as of right now, I don't see any huge warning signs except for a concerning red candle so far. And this is exactly why my portfolio is set up the way it is. When the market is going up, I get a lot of pushback on having such a large cash position, but then those same people are panicking every time the market corrects. But by having this cash position, I feel like I'm ready for the most possible outcomes, and it's very easy for me to navigate the volatility this late into the cycle. And as always, if you'd like to learn about my portfolio automation system, mental models I use to navigate this market, or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program in the video description. And now we do have to be honest with ourselves. This false breakout we're seeing right now on the weekly chart isn't a bullish sign we should be celebrating, but we don't want to jump to conclusions until we see more evidence. Those false breakouts have resulted in corrections in the past. Some were smaller, some were larger, and perhaps we might be seeing the same thing here again, but I don't think we should jump to conclusions based on 1 week of price action until we actually see some continuation and some major warning signs that something isn't right. It's no surprise that we've also seen ETF inflows slow down. We saw some huge inflows coming in as prices rallying, but now that we're consolidating, we're seeing some profit taking and we're seeing some slowdown in inflows, which is normal for any asset. You can't just see more and more inflows and increasing inflows day after day. There do have to be some consolidation periods and some slowdowns as well. And now it seems like a lot of this fear is driven by the fact that Besant said that the US government would not be buying Bitcoin. If this surprised you in any way, I would really look into your sources, because the chances of the US government ever market buying your bags were already very, very small. In my opinion, there is absolutely no reason why the US government should be buying Bitcoin, especially when it already holds 200,000 Bitcoin worth $25 billion. As for Ethereum, we have seen a rejection at the previous all-time high for now, but I expect this to just be some consolidation before we do enter price discovery once all of the leverage long positions have been sufficiently wrecked. We did finally see some outflows after an 8-day streak where the Ethereum ETFs pulled in $3.7 billion, and you can see how tiny the outflow was compared to the inflows that came before it. So based on what we're seeing right now, it's hard to say that Ethereum isn't going to be rallying higher and entering new all-time highs. And we still have our Ethereum treasury narrative in full swing. Bitmine and Sharplink are raising over $25 billion to buy more Ethereum. Will they actually be able to raise that much? Who knows? But whatever they do end up raising should put some upward pressure on price. And we're still seeing a very nice slow and steady increase in these treasury holdings, the same way we're seeing with the ETF holdings. So it is quite easy to remain optimistic on Ethereum's price action. For now, we still have a bit of room to go before we hit our major pivot level at the 100-week moving average, which was resistance many times over. So I do expect Ethereum to struggle against Bitcoin once it reaches that level. But my target by the end of the cycle is the 0.5 Fibonacci retracement and the 2022 low. But that's quite a ways away, especially as Ethereum's market cap gets bigger and bigger. And as always, it's not all sunshine and rainbows. There are some warning signs of a correction for Ethereum and Bitcoin as well. We saw record volume for the Ethereum and Bitcoin ETFs this week. And the past 2 times we saw record volume did end up being local tops in December of 2024 and March of 2024. So usually when the ETFs see the most trading and the most action and the most FOMO, that ends up resulting in a local top and correction. Now, this is only one data point, but it is perhaps a warning sign that we are seeing a bit too much greed on Ethereum right now, and it needs to consolidate and chop around a bit before its next move higher, like those previous record high volume weeks. We're also seeing a ton of Ethereum piling up in the unstaking queue, getting very close to $4 billion. And I do have to assume that a lot of this is going to be profit taking. Now, hopefully the Ethereum treasuries absorb a lot of that sell pressure and all we end up getting is a consolidation, but we're going to have to wait for more information to see whether this ends up causing a bigger correction for Ethereum or if the corporate treasuries are going to be able to absorb it. Sentiment is definitely incredibly elevated on Ethereum right now and the complete opposite of how it's been up to this point in the cycle. But we do have strong narratives like AI agents using Ethereum, and we know how powerful the AI narrative is right now. And we know that Ethereum still dominates stablecoins, which is also a huge narrative with all the regulations that have been passed in the US. So perhaps we'll run into some volatility with Ethereum, but I do still believe it has higher to go this cycle. As for Solana, unfortunately got rejected at the range high once again, but these higher lows are still being maintained. So I'm still expecting higher prices for Solana. Solana Bitcoin is also still putting in higher lows as well. So as long as that continues to be the case, I don't see any major warning signs right now. And it's not surprising that Solana is struggling because Ethereum is taking up so much of the attention because of the corporate treasuries and the ETF inflows. But I do think Solana will get its turn once Ethereum cools off a little bit. We now have all three of the assets we monitor outperforming the benchmark of the S&P 500 and Nasdaq. We have Solana almost doubling their performance, Ethereum almost beating their performance by 5x, and Bitcoin outperforming the S&P 500 by almost 6x, which is exactly what you want to see when you are taking way more risk going further out on the risk curve. And yes, there were some times when we were significantly underperforming, but with patience and with a turn in narrative, we're now greatly outperforming the benchmark. And of course, continued performance is going to depend very heavily on what Bitcoin decides to do over the next few weeks and whether or not we can continue our price discovery rally after this brief pullback, or if we're going to see prolonged chop and consolidation. Right now, global liquidity is still pointing to a rally until about mid-September. So that remains my base case as of right now. And I'm still watching this global liquidity index very closely to see if we're going to see new lower lows, which would be a major warning sign of a cycle top, or if it's going to break out here and start putting in new highs once again, which could give us a lot more insight into perhaps seeing an extended cycle this time around. But as of right now, we have to wait on that data and see what the global liquidity index decides to do. As for the US dollar index, still slowly grinding higher, but still hasn't really broke out in either direction. As of right now, we are seeing the market starting to take that third rate cut off of the table for 2025. Now we have a lot of data prints between now and December, so I expect these probabilities to shift quite a bit as we get closer to those meetings. But as of right now, we're expecting a rate cut in September with almost 100% certainty, sitting at 92% right now. And October is a bit of a coin flip. And as of right now, the market is not expecting a rate cut in December, so only 2 rate cuts for the remainder of 2025 because we got some pretty stubborn inflation data, and we are seeing a leading indicator for inflation, the producer price index, spiking and heading in the wrong direction, perhaps due to tariffs. And now this doesn't have to carry over into inflation. These producers could end up eating the additional cost and not passing it on to the consumer, but usually they do, or at least they pass on a portion of it. So it's no surprise we saw Bitcoin sell off once we got this elevated PPI print, because inflation concerns are real and they're really going to limit how much the Fed is able to cut rates and ease with a stubborn inflation, because we know that growth is still positive. The labor market is still holding on okay as of right now, and risk assets like the S&P 500 and Bitcoin are near or at their all-time highs. So the Fed does not have that much room to cut rates or ease aggressively, which will become an issue at some point in the very near future. But for now, as we look forward, the federal government is still running huge deficits. That trend seems to be worsening. Exponential debt growth means exponential money supply growth until something breaks, and that puts upward pressure on our risk assets that we price in the devaluing fiat currency like the S&P 500, and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.